There's a side effect of this mini banking crisis. The price of oil has crumbled, falling from around $80 less than 3 weeks ago to $69 and change today. That's up from lows of $64 earlier this week. Hey, it makes sense. When banks are worried about going under, they lend out less money, which slows the economy, reduces demand for energy. But I wonder if that's the right call at this time because, well, we've got so many cross-currents. The sanctions on Russian oil, but the Russians are pumping like mad. Biden administration's effort to refill the Strategic Petroleum Reserve seems to mean nothing at all. All the infrastructure spending that's been authorized in recent years, that could be good. When the situation is complicated, you know what I like to do. I like to check in with the best energy analyst in the business. One who is, by the way, not biased in any way, shape, or form. And that's Rusty Braziel. He's the founder and executive chairman of RBN Energy. Rusty, welcome back to Mad Money.
Well, Jim, good to be with you again. Thanks for having me on.
Well, Rusty, it's always great to talk to you. And I know about it a little more than a decade ago, you told me that one of the greatest stories you're ever going to hear is that production's coming back, that we may even get to the point where we're self-sufficient. No one believed you, and it all came true. But now I'm wondering, I'm starting to hear really good people, like even like the Pioneer CEO, Scott Sheffield, say that maybe things have peaked. And I hesitate to think that happened that fast. Is it the end?
No, it's not the end, Jim. We're certainly not going to be growing at the rate that we were in 2018, 2019, the boom days. That was 15% a year growth. And then when we had, producer discipline kick in and ESG issues kick in, that slowed things down. And then COVID just shut the whole thing down for basically a year. But things have climbed back, and they're going to continue to climb back. Our production forecasts, we're looking at somewhere between 1.5 and 2% a year for at least the next 5 years or so. So it's not crazy anymore, but it's healthy growth.
Okay, that's good. Now I read you every morning, and you know that because I email you about a second after I get it. And for instance, I've been reading a lot about New Mexico from you. Last week was about Utah. I'm starting to hear about places that may have had oil that aren't so good. Next thing you know, you're talking about going to Pennsylvania. I don't know. But it does seem like that our technology is such that we should be thinking about New Mexico as a possible winner here.
New Mexico is already a winner, has been a winner. New Mexico production growth is good, and that is because, like always, what we've seen for the last 10 years is that the more producers drill, the more they figure out how the play works. And when they figure out how the rock works, they figure out how to produce more with spending less money. And that's definitely what's going on in New Mexico.
Well, if that's the case, then it starts telling me that the gating factor may be ultimately pipelines. Now, you've been doing some great stuff about pipelines and LNG and pipelines trying to get oil and gas all over the place. But we have failed miserably getting into New England, haven't we?
It's been a really tough situation for New England. When you look at what's happened, they've really boxed themselves in. They've shut down coal plants. They've shut down some nukes, which means that they need a lot more natural gas. And natural gas as a fuel to generate electricity has increased from like 10% 20 years ago to 50% today. That's not a problem during the summer and during most of the year because there's enough pipeline capacity to get that much gas into New England. The problem happens when it gets cold. So when it gets cold, the natural gas has to go to the residential and commercial customers, which means there's less gas to go to power generation, which means power generators have to use something else. So take an example, what happened Christmas last year, got cold, there wasn't enough gas for power generation, and they ended up using oil to generate electricity for about a third of their requirements in that area. I'm sure that's not what they planned, but that's certainly the way it happened. And the more renewables they add to the generation mix in New England, the worse the problem is going to get.
Well, people start realizing that, and the politicians better realize there's going to be a lot of upset people. Now, we just had a chart of natural gas. I think it may be unnaturally low at $2, but I look to you for that. And I know that it's not your job to say it's going to go to 6, 7. I'm never going to put you in a spot like that. But it does seem that both natural gas and this week when oil went to 64, these seem like lower levels to me versus unemployment where it is versus the world where it is. And maybe I'm looking at it too optimistically, though.
No, this is a weird year for natural gas. So what happens is that natural gas production has continued to increase. We're getting more gas per barrel of oil that gets produced. It's called the gas to oil ratio. There's more gas coming out of the ground for each barrel of oil that gets produced. And at the same time, the primary market for natural gas increase in growth is the LNG market. And this year is the first year since we first started exporting LNG in 2016 that we're not adding new export dock capacity. So you've got production increasing.
Okay.
You've got dock capacity that's not increasing. So you've got an oversupply of gas. There's a lot of gas in inventory. Price goes down. It works exactly the way Economics 101 tells you that it ought to work. Here's the happy news. The happy news is starting next year and for several years to come, there's a lot of new LNG capacity coming online. Gas prices are going to be increasing starting next year and probably increasing after that. I'm not saying we're going to get back to, $7, $8, $9, $10, but you don't know, because something important has happened to natural gas in the United States, and that is we are now much more tied to what happens in the rest of the world. And what that means is volatility. When crazy things happen in the world, crazy things now can happen to natural gas. And of course, now it's also become a political football as well. So you add that together with what's going on with supply demand in the United States, and prices are going to be higher, and prices are going to be more volatile.
Well, that's what matters. $2 is too little for most of the gas companies that I deal with. And I like those companies very much, and I do share your view that it's an international price at last. You said that would happen too. No one believed in what you said. I'm banking with Rusty Braziel. Rusty is the founder and executive chairman of RBN Energy. Great to see you. Sorry I could not see you yesterday. That was my voice that caused the problem. I apologize.
Not a problem. Hope you're feeling better.
Thank you, Rusty. Sure do. Have a great weekend. Good to talk to you.
All right. You too. Thanks.
Coming up, what's in your mind, Cramerica? Give us a call. The lightning round is storming the NYSE. Next.